Rima, many thanks for joining us. Well, speaking of pressure, once valued at over $5 billion, Unicron PharmEasy is looking at a down round of funding. Now, this fresh round is expected to be at an 85 to 90% drop in valuations. But what has led to such a sharp fall in valuations in the last 2 years? And what was India's first e-pharmacy to enter into the Unicron club, backed by blue-blooded private equity companies like TPG and Temasek? What did it get wrong? Ekta Batra tells us more on what's ailing PharmEasy. Ekta.
Thanks for that. Well, one of the biggest problems the industry watchers say is that PharmEasy expanded too fast too soon. The valuations of the company rose rapidly, aided by the COVID-19 froth around healthcare companies. It entered into the Unicron club with a $1.5 billion valuation in April 2021, and in just a matter of few months went to around $5.6 billion in terms of valuation. The company at the same time in 2021 went on a rapid expansion spree to position itself as a broader online healthcare firm, say industry watchers. The company shelled out around close to 6,000 crores on 3 acquisitions, from Indian online healthcare platform MedLife to Bangalore-based supply chain firm AcnaMed, and its biggest bet, Thyrocare, the listed diagnostic chain, which PharmEasy bought for over 4,500 crores. The company took on debt to fund a lot of the expansion, pledging 100% of its stake in Thyrocare to fund the $600 million buyout. As of September 2021, the debt stood close to around 2,500 crores. The company planned a $1 billion IPO to pay it off, but was eventually shelved. It eventually took a $285 million loan from Goldman Sachs to pay off their earlier debt, but breached the loan covenant. The acquisition, it seems, didn't pay off as anticipated. AcnaMed's loss has widened over 10 times in 1 year. Thyrocare's valuations have plummeted 60% from the time PharmEasy bought it, with 100% of the promoters' shares pledged since September 2021. The diagnostic business has also been impacted by factors such as COVID-19 gains petering off, competition in the space, quality perception issues and transition issues, and fundamentals such as margins worsening to as low as 18% from a peak of around 50%. Now, on the other hand, the online pharmacy space has been weighed down by fierce competition and regulatory uncertainty. Additionally, industry watchers say platform service companies have had difficulty scaling up post-COVID-19 as consumer behavior hasn't been as sticky as anticipated. The fresh round of funding is expected to be used to clear up the current loans with the company. The company, which logged its first EBITDA profit of around 14 crores in April, will aim to improve financials. Lastly, another trigger to watch for will be the journey of Thyrocare and whether a stake sale will be contemplated.
All right, Ekta, many thanks for joining us. That is the pressure that PharmEasy finds itself under, and it's not just the only unicorn in trouble at this point in time. Jewelry retail player Senco Gold's 400 crore